Reminiscences of a Stock Operator Chapter V. The Average Ticker Hound, or, as they used to call him, Tapeworm Goes Wrong, I suspect, as much from overspecialization as from anything else. It means a highly expensive inelasticity. After all, the game of speculation isn't all mathematics or set rules, however rigid the main laws may be. Even in my tape reading, something enters that is more than mere arithmetic. There is what I call the behavior of a stock, actions that enable you to judge whether or not it is going to proceed in accordance with the precedents that your observation has noted. If a stock doesn't act right, don't touch it, because, being unable to tell precisely what is wrong, you cannot tell which way it is going. No diagnosis, no prognosis. No prognosis, no profit. It is a very old thing, this of noting the behavior of a stock and studying its past performances. When I first came to New York, there was a broker's office where a Frenchman used to talk about his chart. At first, I thought he was a sort of pet freak kept by the firm because they were good-natured. Then I learned that he was a persuasive and most impressive talker. He said that the only thing that didn't lie because it simply couldn't was mathematics. By means of his curves, he could forecast market movements. Also, he could analyze them and tell, for instance, why Keene did the right thing in his famous Atchison preferred bull manipulation, and later why he went wrong in his Southern Pacific pool. At various times, one or another of the professional traders tried the Frenchman's system and then went back to their old unscientific methods of making a living. Their hit-or-miss system was cheaper, they said. I heard that the Frenchman said Keene admitted that the chart was 100% right, but claimed that the method was too slow for practical use in an active market. Then there was one office where a chart of the daily movement of prices was kept. It showed at a glance just what each stock had done for months. By comparing individual curves with the general market curve and keeping in mind certain rules, the customers 47. Reminiscences of a stock operator could tell whether the stock on which they got an unscientific tip to buy was fairly entitled to a rise. They used the chart as a sort of complimentary teepster. Today there are scores of commission houses where you find trading charts. They come ready-made from the offices of statistical experts and include not only stocks, but commodities. I should say that a chart helps those who can read it, or rather who can assimilate what they read. The average chart reader, however, is apt to become obsessed with the notion that the dips and peaks and primary and secondary movements are all there is to stock speculation. If he pushes his confidence to its logical limit, he is bound to go broke. There is an extremely able man, a former partner of a well-known stock exchange house, who is really a trained mathematician. He is a graduate of a famous technical school. He devised charts based upon a very careful and minute study of the behavior of prices in many market stocks, bonds, grain, cotton, money, and so on. He went back years and years and traced the correlations and seasonal movements, everything. He used his charts in his stock trading for years. What he really did was to take advantage of some highly intelligent averaging. They tell me he won regularly until the World War knocked all precedents into a cocked hat. I heard that he and his large following lost millions before they desisted. But not even a world war can keep the stock market from being a bull market when conditions are bullish, or a bear market when conditions are bearish. And all a man needs to know to make money is to appraise conditions. I didn't mean to get off the track like that, but I can't help it when I think of my first few years in Wall Street. I know now what I did not know then, and I think of the mistakes of my ignorance because those are the very mistakes that the average stock speculator makes year in and year out. After I got back to New York to try for the third time to beat the market in a stock exchange house, I traded quite actively. I didn't expect to do as well as I did in the bucket shops, but I thought that after a while I would do much better because I would be able to swing a much heavier line. Yet I can see now that my main trouble was my failure to grasp the vital difference between stock gambling and stock speculation. Still, by reason of my 7 years' experience in reading the tape and a certain natural aptitude for the game, my stake was earning not indeed a fortune but a very high rate of interest. I won and lost as before, but I was winning on balance. The more I made, the more I spent. This is the usual experience with most men. No, not necessarily with easy money pickers, but with every human being who is not a slave of the hoarding instinct. 48. Reminiscences of a stock operator. Some men, like old Russell Sage, have the money-making and the money-hoarding instinct equally well developed, and of course they die disgustingly rich. The game of beating the market exclusively interested me from 10 to 3 every day, and after 3, the game of living my life. Don't misunderstand me. I never allowed pleasure to interfere with business. When I lost, it was because I was wrong and not because I was suffering from dissipation or excesses. There never were any shattered nerves or rum-shaken limbs to spoil my game. I couldn't afford anything that kept me from feeling physically and mentally fit. Even now, I am usually in bed by 10. As a young man, I never kept late hours because I could not do business properly on insufficient sleep. I was doing better than breaking even, and that is why I didn't think there was any need to deprive myself of the good things of life. The market was always there to supply them. I was acquiring the confidence that comes to a man from a professionally dispassionate attitude toward his own method of providing bread and butter for himself. The first change I made in my play was in the matter of time. I couldn't wait for the sure thing to come along and then take a point or two out of it as I could in the bucket shops. I had to start much earlier if I wanted to catch the move in Fullerton's office. In other words, I had to study what was going to happen, to anticipate stock movements. That sounds asininely commonplace, but you know what I mean. It was the change in my own attitude toward the game that was of supreme importance to me. It taught me, little by little, the essential difference between betting on fluctuations and anticipating inevitable advances and declines, between gambling and speculating. I had to go further back than an hour in my studies of the market, which was something I never would have learned to do in the biggest bucket shop in the world. I interested myself in trade reports and railroad earnings and financial and commercial statistics. Of course, I loved to trade heavily, and they called me the boy plunger, but I also liked to study the moves. I never thought that anything was irksome if it helped me to trade more intelligently. Before I can solve a problem, I must state it to myself. When I think I have found the solution, I must prove I am right. I know of only one way to prove it, and that is with my own money. Slow as my progress seems now, I suppose I learned as fast as I possibly could, considering that I was making money on balance. If I had lost oftener, perhaps it might 49. Reminiscences of a stock operator have spurred me to more continuous study. I certainly would have had more mistakes to spot, but I am not sure of the exact value of losing, for if I had lost more, I would have lacked the money to test out the improvements in my methods of trading. Studying my winning plays in Fullerton's office, I discovered that although I often was 100% right on the market, that is, in my diagnosis of conditions and general trend, I was not making as much money as my market tightness entitled me to. Why wasn't I? There was as much to learn from partial victory as from defeat. For instance, I had been bullish from the very start of a bull market, and I had backed my opinion by buying stocks. An advance followed, as I had clearly foreseen. So far, all very well. But what else did I do? Why, I listened to the elder statesmen and curbed my youthful impetuousness. I made up my mind to be wise and play carefully, conservatively. Everybody knew that the way to do that was to take profits and buy back your stocks on reactions. And that is precisely what I did, or rather what I tried to do, for I often took profits and waited for a reaction that never came. And I saw my stock go kiting up 10 points more, and I sitting there with my 4-point profit safe in my conservative pocket. They say you never grow poor taking profits. No, you don't. But neither do you grow rich taking a 4-point profit in a bull market. Where I should have made $20,000, I made $2,000. That was what my conservatism did for me. About the time I discovered what a small percentage of what I should have made I was getting, I discovered something else, and that is that suckers differ among themselves according to the degree of experience. The tyro knows nothing, and everybody, including himself, knows it. But the next, or second, grade thinks he knows a great deal and makes others feel that way too. He is the experienced sucker, who has studied not the market itself, but a few remarks about the market made by a still higher grade of suckers. The second-grade sucker knows how to keep from losing his money in some of the ways that get the raw beginner. It is this semi-sucker rather than the 100% article who is the real all-the-year-round support of the commission houses. He lasts about 3.5 years on an average, as compared with a single season of from 3 to 30 weeks, which is the usual Wall Street life of a first offender. It is naturally the semi-sucker who is always quoting the famous trading aphorisms and the various rules of the game. He knows all the don'ts that ever fell from the oracular lips of the old stagers excepting the principal one, which is 50. Reminiscences of a stock operator. Don't be a sucker. This semisucker is the type that thinks he has cut his wisdom teeth because he loves to buy on declines. He waits for them. He measures his bargains by the number of points it has sold off from the top. In big bull markets, the plain, unadulterated sucker, utterly ignorant of rules and precedents, buys blindly because he hopes blindly. He makes most of the money until one of the healthy reactions takes it away from him at one fell swoop. The careful Mike sucker does what I did when I thought I was playing the game intelligently according to the intelligence of others. I knew I needed to change my bucket shop methods, and I thought I was solving my problem with any change, particularly one that assayed high gold values according to the experienced traders among the customers. Most, let us call them customers, are alike. You find very few who can truthfully say that Wall Street doesn't owe them money. In Fullerton's, there were the usual crowd. All grades. Well, there was one old chap who was not like the others. To begin with, he was a much older man. Another thing was that he never volunteered advice and never bragged of his winnings. He was a great hand for listening very attentively to the others. He did not seem very keen to get tips, that is. He never asked the talkers what they'd heard or what they knew. But when somebody gave him one, he always thanked the tipster very politely. Sometimes he thanked the tipster again when the tip turned out okay, but if it went wrong, he never whined, so that nobody could tell whether he followed it or let it slide by. It was a legend of the office that the old jigger was rich and could swing quite a line. But he wasn't donating much to the firm in the way of commissions, at least not that anyone could see. His name was Partridge, but they nicknamed him Turkey behind his back because he was so thick-chested and had a habit of strutting about the various rooms, with the point of his chin resting on his breast. The customers, who were all eager to be shoved and forced into doing things so as to lay the blame for failure on others, used to go to old Partridge and tell him what some friend of an insider had advised them to do in a certain stock. They would tell him what they had not done with the tip, so he would tell them what they ought to do. But whether the tip they had was to buy or to sell, the old chap's answer was always the same. The customer would finish the tale of his perplexity and then ask, "What do you think I 51? Reminiscences of a stock operator ought to do. Old Turkey would cock his head to one side, contemplate his fellow customer with a fatherly smile, and finally he would say very impressively, "You know, it's a bull market." Time and again I heard him say, "Well, this is a bull market, you know," as though he were giving to you a priceless talisman wrapped up in $1 million accident insurance policy. And of course I did not get his meaning. One day, a fellow named Elmer Harwood rushed into the office, wrote out an order, and gave it to the clerk. Then he rushed over to where Mr. Partridge was listening politely to John Fanning's story of the time he overheard Keene give an order to one of his brokers, and all that John made was a measly 3 points on 100 shares. And of course, the stock had to go up 24 points in 3 days right after John sold out. It was at least the 4th time that John had told him that tale of woe, but old Turkey was smiling as sympathetically as if it was the first time he heard it. Well, Elmer made for the old man, and without a word of apology to John Fanning, told Turkey, "Mr. Partridge, I have just sold my Climax motors. My people say the market is entitled to a reaction and that I'll be able to buy it back cheaper. So you'd better do likewise, that is, if you've still got yours." Elmer looked suspiciously at the man to whom he had given the original tip to buy. The amateur or gratuitous tipster always thinks he owns the receiver of his tip body and soul, even before he knows how the tip is going to turn out. "Yes, Mr. Harwood, I still have it. Of course," said Turkey gratefully. It was nice of Elmer to think of the old chap. "Well, now is the time to take your profit and get in again on the next dip," said Elmer, as if he had just made out the deposit slip for the old man. Failing to perceive enthusiastic gratitude in the beneficiary's face, Elmer went on, "I have just sold every share I owned." From his voice and manner, you would have conservatively estimated it at 10,000 shares. But Mr. Partridge shook his head regretfully and whined, No, I can't do that." 52. Reminiscences of a stock operator. "What?" yelled Elmer. "I simply can't," said Mr. Partridge. He was in great trouble. "Didn't I give you the tip to buy it?" "You did, Mr. Harwood, and I am very grateful to you. Indeed, I am, sir, but hold on, let me talk. And didn't that stock go up 7 points in 10 days, didn't it? It did, and I am much obliged to you, my dear boy, but I couldn't think of selling that stock.